We're now seeing something on Wall Street we haven't seen for a while, a rash of mega deals and mergers. This week, food giant Heinz announced Warren Buffett would be purchasing the company, along with the Brazilian group, for $23 billion. And American Airlines and U.S. Airways announced an $11 billion merger. Joining us now is Mark Zandi, chief economist for Moody's Analytics. Mark, the rash of deals that we're reporting out, what does that tell us about the possibility that we are seeing real traction for a sustained recovery?
Well, I think this is the real deal, Jim. This shows that confidence is coming back, and confidence is key to a better economy. Investors in these companies feel like these companies have very good prospects, and they're willing to ante up for them. And of course, the record low interest rates is making it very cheap to finance those purchases. And sellers of these companies, those shareholders, they're feeling pretty good too. They're getting a good deal because stock prices are back to record levels or close to record levels. So all this mergers and acquisitions activity is a very good sign. It means the economy is getting back to normal.
And when you get into one of these situations where it looks like there's some sort of recovery going on, a lot of tea leaves start getting read. Let's talk about gold for a second, because while gold is a place where people go when there's a lot of fear, we're now seeing the price of gold falling. So what does that tell us?
That's another good sign. You're right. You're exactly right. In times of trouble, when things look like they're very dark, people run for the safety of gold. It's where they go when they're running for the proverbial bunkers. The fact that gold prices are now declining and some really big investors, smart investors, are selling some of their gold holdings is a good sign. They feel like, well, maybe the coast isn't clear, but the biggest risks to the economy are behind us.
Can you close the circle for us a little bit on this idea of mega deals? While they're great for large corporations, shareholders, stock prices, what does it mean, if anything, for job creation?
Yeah, good question. In the near term, it probably means some job loss because these companies are going to be looking to cut costs to make sure that the deals work. Although I'd have to say these deals probably will mean less cost cutting than in times past. These companies are pretty lean and efficient already. But in the longer run, it means more jobs because these companies are going to be more efficient. The industries they're in more competitive. Take the case of American Airlines and U.S. Air. The unions are in favor of the deal because they know if they don't go through this, then these companies aren't going to be viable and they're going to lose the jobs in the future. These deals make the companies more competitive and will create more jobs longer run.
No shortage of positive signals if you want to look for them. On the other hand, there's some headwinds here. I know the price of gasoline, for instance, has been up, I think, 12 cents in the last week and 40-some cents over the last month. That can't be good.
No, there are risks to our economy, and nothing will hurt more quickly than rising oil and gasoline prices. And gasoline prices have risen. Now, it's not atypical at this time of year as refiners begin to gear up for the key summer driving season. So that's not atypical. But if national gasoline prices rise another 50 cents a gallon, say back close to $4 a gallon, that indeed would be a problem. So we have to keep our eyes on that.
And for all of this sort of hopeful glass half full view, could Washington just sort of stomp on the whole thing with protracted fights about the budget as we get closer to this notion of the sequester?
Yeah, sure could. Another significant risk, the political brinkmanship in Washington is obviously a problem. We have these mandatory spending cuts that are going to kick in a couple of weeks, and they look like that's going to happen for sure. There's a potential for a government shutdown at the end of March, and of course, the debt ceiling is going to become an issue later this summer. So we have to policymakers have to make sure that they don't undo this improving confidence. I think if they just kind of stick roughly to script, we'll be okay, but they have to stick to that script.
Mark Zandi, thank you so much.
Thank you.